Hi, welcome to Let's Talk Bonds, the weekly bond podcast from INR Bonds. I'm Arjun Patsati, and in Let's Talk Bonds, I take investors and financial advisors through the best options available for investors in fixed income markets, and especially the bond markets, where where the returns are coming from across all products by through the bonds. And in this podcast, it's all about the fact that markets are clueless. And the fact, why are the markets clueless? Because everybody else around them are not providing any direction. Central banks are clueless, governments are clueless, and no one knows what can happen going forward because there's so many things happening around the markets that it's very difficult to identify a single source of direction. And if you see the US markets, that yield curve, the 2 year bond is trading at higher yield than the 30-year bond. But even then, the whole yields have moved up very sharply, and no one knows where it's going to end. And that's leading to volatility in equity markets and currency markets, and also credit markets. In India, the RBI is painting a very positive picture in terms of the fact that they are saying that they're able to control inflation, or that inflation expectations are slowly coming off. And it does look as if with higher inflation, government finances are looking better. And the government is not stressed for funds, which is again a positive for bonds. But the question is, with the forex foreign reserves down sharply, and with RBI selling dollars, the rupee INR is trading at record lows. Trade deficit is widening, and current account deficit is too is widening, and the huge amount of volatility in markets. Even in this case, whether India is still positive in the whole negatives around the world, or will they follow everybody else as they go down a negative path? Difficult to say. So, what do investors do in this market, especially fixed income investors? And with equity markets extremely volatile, many investors want to have a balanced portfolio and give more stability to the portfolio through bonds. But with inflation at very high levels, it's very important for them to earn enough returns to beat inflation. So where do they look at? So we have now government bond yields rising again. They've fallen sharply after the last couple of weeks after indications of India being included in global bond indices. And as usual, INR bonds has covered what are the impact of this on bonds and investors, and whether how positive or negative it is. And but the yields are moving up again. So 5 year bond yields, GSEC yields are closer to 7.2% after coming down below 7%. And 3 year yields are at around 7% levels. And if you take Bharat bond ETF, 3 year bond yields at 7.15% and 10 year at 7.4%. And in corporates, state development loans, 10 year yields have come down to 7.5%. It will go up again. In corporates, you had 2 year lay corporates at around 7%, and 3 year corporates slightly uh, 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 3 year corporate bonds at closer to 7.15% to 7.2% for the best issuers, and every other issuer will be looking at higher than those levels. And in the private placement market, we have seen Apollo Tyres raise 1 year bond at 6.93%. Ashirwad Microfinance, which is a best-selling bond on the INR Bonds platform, has issued 2 year bonds at 9.6%. Investors in INR Bonds platform have bought Ashirwad 1 year bond at around 9.3 to 9.4% levels. And these bonds are now trading at 8.5 to 8.3 to 8.5% levels. SBI cards issued 3-year bonds at 7.39%. And NABARD issued 3-year bonds at 7.2%. That is it's a blue chip RBI agriculture regulator. Tata Capital issues 3-year bonds at 7.5%. Canara Bank issued a 5-year perpetual with a 5-year call at 7.99%. And State Bank of India, as like mentioned, issued 5-year call option perpetual bond at 7.75%, while Tata Capital Housing Finance issues 10-year bond at 7.85%. These are some of the issues. TVS Credit, as mentioned, issues 3-year bond at 8.3%. Again, a very strong selling bond in INR bonds platform. And all these are the bonds are available for investors. So in a market where it is clueless and investors are wondering where to park the money, it's good to look at corporate bonds, which have visibility of returns in a very short time. So maybe maximum of 2 years, maybe going up to 3 years, but definitely not over that, because we don't know what can happen. And corporates that have strong promoters, visibility of liquidity, both market liquidity and promoter liquidity, and well-run companies that are offering reasonable yields of maybe 7.5%, depending on the quality of the issuer, and going up to maybe 9.5% or even 10% if the issuer is strong. And even though they could be in a riskier lending kind of a business, the issuer itself is doing a good job and the promoters are strong, then it does make sense to look at that kind of a bonds. So look for maybe 1 to 3 year maximum, but preferably 2-year bonds maximum, or just over that, yielding higher yields, but not very high yield and not too risky bonds. And also always check the market liquidity of the bonds, whether these bonds can be sold. And the best place to look for it is INR bonds, where we enable investors to actually sell bonds they have bought. So one is to get liquidity and even to take capital gains if required. Thank you for listening to the podcast. And do send in your comments if you have any. And if you require anything, just log into INR bonds and get the best information. And if you're a financial advisor, the best place for you is INR bonds partners, where we can identify the bonds that is suitable for your client's portfolio, read in all the information along with our risk score, proprietary risk score, and take the best investment decision for your clients, and also make the easiest of investments through the platform.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.